Hey, welcome to our Homebuyer Seminar. I'm Bill Gross, and we get together every week to talk about how to help people buy your first home or your next home. I'm here with my colleague and good friend
Patricia Castillo.
and partner on some deals. We close some business here together. We're going to talk about, and also our good friend and lender.
Shannon Lender, how's it going, guys?
One of the biggest changes when I started the business, I started in 1984 as a lender. One of the biggest changes that's changed in real estate is the declining percentage of buyers who are first-time home buyers. At the same time, the increased age of first-time buyers, which are often people who are older and catching on some sort of business. That said, there are programs for first-time buyers that are available to help them get in. And Shannon brought up the LIPA program, which is the Low Income Purchase Assistance Program. Shannon, give us kind of an overview. What is the LIPA program and how does it help buyers get into their first home?
Yeah, no, that's a good question. So this one is specifically for people that want to buy in Los Angeles. They're giving you up to 160,000 in assistance. Now you always have to define, the help, because some are grants, some are assistance. And when you hear the term assistance, that usually means you have to pay it back, right? So in this program, you have to be a first-time home buyer, and it has to be in the city of Los Angeles. That's another thing. And also too, if you're a first-time home buyer within the last 3 years, so you can own a property and then, after 3 or 4 years, you can still apply and get these funds. Now, with this program, you still have to put 1% of the purchase price down, which I think is smart because I always advocate, and I don't know about you guys, but I don't recommend you buy a home if you literally have $0. I think it's smart to use the resources that are available to you, right? And hey, if you can keep some money in your pocket, that's great. But you never want to just go in a house with $0, in your bank account. So I think it's smart that you're requiring you to put 1% down. You do have to pay it back if you sell, refinance, things like that. You do have to pay back. And there is, I think on this one, you do have to do an educational course. And the good thing though is it's 0% interest. That's the good thing, but there is a shared appreciation. That's the catch, right? They want some of that appreciation from the property, which I believe that's how they're funding these programs, right? Is whenever they get paid off, they're going to use some of those funds to just help more family members. But yes, if you sell it or refinance, you are going to pay it back. I think it's 30% of the shared appreciation that they're going to want.
Shannon, I have a question really quick
Go for it.
regarding the first-time home buyer requirement. Is it a first-generation home buyer, just like the California Dream for All?
Good question. No, it is not. This one is just a first-time home buyer. If you have not had a property or interest in a property in the last 3 years, you do qualify for this. So that's good. First generation, what she's referring to is if you or your family member has never owned a house, which
Right.
for the California Dream for All program, which they'll help you with 20% down, and they're going to want 20% equity. That program, yes, you need first generation. But for this program, it's going to be pretty much if you're a first-time home buyer, it doesn't matter if your parents are or not, but if you haven't had a property within the last 3 years, you qualify for that program.
So I think that opens up the window for a lot more buyers to come in, because if you have to be a first generation buyer versus not having that requirement and just being a first time buyer, maybe you haven't owned a property in 3 years, then that opens up the window for more people to apply, that are in that income bracket.
Yeah, yeah. And obviously, this goes without saying, but you do have to occupy the property. You can't just buy it and rent it out. That's another thing. And I find it interesting about what the income limits are because they say low income and it goes by people, right? Applicants. So there's one person, two people, three people, four adults. One is 93,000. So if you're at 93,000 or under, you're going to qualify. If there's two people, it's 106,000. If you make 106,000 or less for two people, then you qualify. Three is 119,000. If you scroll up, Bill, there should be, scroll up on that page, there should be right there, yeah. So here are all the different income limits for each household, low income limits. Now there's LIPA and MIPA. There's low income and moderate income. There's two different ones. So if you make a little bit more, there's a moderate income version of this program that you can qualify for.
And do the income limits change according to the county? Orange County, Los Angeles, Riverside.
You bring up a good point. LIPA and MIPA is just for Los Angeles.
City of, not even
Yeah,
county, city of Los Angeles.
Yes, City of Los Angeles. So we're going to go through, I'm going to go through different because there's Ontario ones, there's Santa Ana, there's different programs for specific cities, which is why I always, just as a side note, I kind of personally love Calhaffa because it's state based. And you don't know how many times I've gotten people qualified for these programs and they end up not even wanting to be in that city anymore, right? They're like, oh, well, I don't want to live. I want to go somewhere else. I'm like, well, we're gonna have to restructure everything because I did everything for this program and for you to fit in this box, but now you're leaving, which it's fine, right? If you change your mind about a city, but again, with the city-based programs, funds are always up and down. It's stricted to that city particular, and there's just a lot more hoops, which is fine. Again, there's no such thing as a free lunch. Let's just be honest. There's no free lunch. There is, there's going to come with something. It's a higher rate, shared appreciation, more requirements that you're going to have to do outside of FHA and conventional. Because again, they're helping you with a certain amount, and you still have to qualify for an FHA or conventional loan, right? On top of this, so there's no, hey, we're going to finance 100%. Even LIPA and MIPA are saying, hey, we'll give you up to 160,000. The other money is going to have to come from a first mortgage. Right. So regardless, you're going to have to still, pretty much qualify for that. And then total household income, that's anyone that's over 18. So if you have kids, it doesn't include your kids. And it has, again, like Bill said, it has to be a property that's in Los Angeles, that is a regular home, and the max purchase price is $956. I love that. There is no free lunch. Down payment assistance programs are not free in the sense of, hey, they're just going to give you the money and you can do whatever you want with it. No, there's going to be extra courses you're going to have to take, which again, I love the courses. The courses that they have are very educational, but there's courses, there's additional information that they're going to need. It could take longer. There's a longer process because on LIPA specifically, they have times when you have to submit these and to reserve them because there's a certain amount. They have 24 usually at a time vouchers that they're going to submit. And then whoever's going to get them is going to get them. Because that's another thing. You have to, from what I'm understanding with LIPA, you have to be in contract and then submit your voucher, quote unquote, and see if you get approved. So that's, the give and take is, I can submit for a property, apply for the voucher, and I have to hope and pray that, hey, I'm one of the ones that get approved. So. And the purchase price is $956. So it has to be $956 purchase price or lower, which I know in Los Angeles City, right? It's possible, but it is going to be a little bit of a challenge. But you can do townhomes, you can do condominiums as well. That's a good thing. They don't do mobiles, but if it's single family townhomes or condos, you can do those. Also, you can do foreclosures and REO properties. So that's another thing. Short sales as well. I see.
Is there like a strict requirement? The way FHA is really picky about peeling paint and property being in really decent condition. Do they have those types of requirements for the LIPA program?
The homebuyers are pretty much, they're going to require to do their own inspection, but no, as long as it's livable, usually they're okay with it. Hey, if you look at it and hey, if it looks like just like a tear down, no one can like just literally walk in and live there, there's going to be an issue. But I always go back to the same thing. All these banks, all these programs, they always look at the two main things: safety and habitability. So if you look at this house, can this person, without any altercations, just move in? If the answer is yes, 9 times out of 10 they're gonna accept it. But Patricia brings a good point. They could accept it, but what if FHA, right, calls it out and things like that? And I can tell you right now, I've gotten some sketchy properties approved with FHA, and you're right, they care about chip paint, any eaves or anything that are not they look cracked or look like there's termite damage, that's going to be a red flag. Another thing they're going to care about is windows. Any cracks in any windows, they're very particular about that. I think it's because when they're trying to sell these loans, obviously they're looking at pictures at the front of the house, and they really, really care about the curb appeal of the house. Inside, I've seen they're a lot more lenient. Again, as long as there's a stove, there's a refrigerator, hookups. People they can move in and just live there. It's fine. So I've gotten some sketchy things approved with FHA. Trust me, I could work some magic on properties that if you want to build sweat equity into.
Right.
There are some banks that, again, they'll have a little leeway. The main thing is the front of the house just has to look really nice, and then
Yeah,
that's
because
it.
I
But
think that's where a lot of buyers are looking to, especially in Los Angeles, right? This is a perfect example. A lot of people want to live in Los Angeles because it's a city that's centrally located to so many things, businesses, museums, nightlife, schools, universities, things like that. But like I've had buyers that have asked me, well, how can I buy an REO property? How can I buy a property that's distressed? The distress could be that the condition is distressed or it's a pre-foreclosure, right? Um, so in that sense, if the property is a distressed property, usually it does have some deferred maintenance or a lot of deferred maintenance. And so I think that's where we have to be careful with the buyers when we're showing them property, right? So I filter out properties that the clients are looking at because even though the buyer is excited about taking on a project and buying a property that needs work, I don't want to show them a property that needs too much work because they may be thinking they're going to get an amazing deal and buy a property under market, and then it's not financeable to the LIPA program, right? So that's why
exactly.
it's important to keep those manage those expectations with the buyers, but also provide them at the same time with all the financing options that are available.
No, exactly right. And another thing too, when you're looking at these distressed properties, obviously the sellers are going to prioritize cash and hard money, people, right? Because they don't want to go through loans. They don't want to go through that process. And 9 times out of 10, if you're a first-time home buyer, you're going to go with FHA or conventional loan or these down payment assistance programs, which to the seller, you have to think about it on their end. They're thinking, okay, well, if there's a loan involved, there's a bank involved, there's going to be more issues, there's going to be more potential, things that come up as opposed to a cash buyer, right? That goes without saying. So if you are one of those buyers that want to go after distressed properties, just be ready for that, and don't think you're going to just really. And again, who knows? Patricia and Bill, they know better. But in my experience, in the back end, when I'm looking at numbers, if we're a finance option, we can't be financed and be the lowest price, right? At the same time, if it's a distressed property. But I can tell you that one thing that has helped get offers accepted, or I guess the ones my clients do, is sometimes the agents tell me to put in there, if the appraiser calls out anything, that the buyer will fix it. So, hey, and that's actually worked. I was like, oh, hey, yeah, if they want to fix it, then they can fix it. So if the appraiser goes out, says, hey, there's some chip paint there's a crack in this window, and hey, you as the buyer are willing to still fix it, pay for the appraiser to come out, take a picture and approve it, that could be one way you can get through that and still get that distressed property. And I had a client last year that I helped get a distressed property. It was a probate sale, and or was it probate or foreclosure? I'm not sure which one was it, but pretty much they didn't want any contingencies, none. They said, if you're financed, we want no contingencies. I guess they were really strict. So what I had to do was give my buyer 3 backup plans in case this did not work. So, hey, we have FHA, we got conventional, and I have a hard money option. So, hey, there's 3, 5, and 20% down, and you're gonna just have to be prepared if for whatever reason something happens to go 20% down, hard money, and then I'll refinance you. Luckily, I got him a conventional loan, and again, there were certain things I had to fix on the appraisal. He got a handyman out there, fixed him right away. We got the appraiser. The appraiser just want pictures hey, send me pictures of these things getting fixed, and he approved the loan. So we got it done conventional, because if your FHA has a lot more, a lot more red tape than a conventional loan does when it comes to the property as well. So that's another
Right.
thing to look into is, hey, maybe go conventional, put a little more down. Your interest rate's a little higher, but you're not paying an upfront mortgage insurance, and the mortgage insurance is going to fall off after, the 20% that you're going to pay. So,
I'll say that because the market slowed a little bit, whereas I could be, as a listing agent, I can be more particular on the offers we accepted being cash. Now I've been working more with financed offers. And what surprises me is two things: how bad some of the lenders are, or how insignificant the realtor and or customer think it is. They send me a pre-approval that's, worthless, like a piece of letterhead. It doesn't have any information on it. They don't include a desktop underwriter. They don't include credit scores. They don't include proof of funds. And so I'll call the lender and they'll send me over something that doesn't match, and they'll send over a bank statement that doesn't match, and then another one doesn't match. And eventually I'm just going to push them aside, and something else comes in and everything's tight and ready to go. That makes a big difference. And so I think that I know Patricia and I had a transaction where the buyer just got frustrated with the paperwork requirements and backed out, and it was frustrating. But I think that you're better off finding that out up front before you get into escrow. The buyer doesn't waste money, the agent doesn't waste their time. And at the same time, those buyers who are complete, you can look like a cash buyer. I would much rather have a really well put together loan package with a really professional loan. I have a transaction right now that we're inches away from getting cleared. Much rather have that than a cash buyer who's sophisticated. In many cases, they can be dishonest. They can say they're cash, they're getting a hard money loan. They don't really know what that means. Whereas a finance buyer, everything's kind of laid out. If they have a company, you can verify the license. So I think it's important. I know for me, I don't know that I necessarily would say cash buyer is better. I would say a strong cash buyer that can verify is better with a track record, but that's not the same that we're talking about. You get people go to seminars and they're about a house, and they get some stupid lender, pre-approval lender, and say they're a cash buyer, and they're just going to wholesale it. Well, I can smell those and set those out. But getting approved ahead of time. And so if you're going to work on this LIPA program, as a listing agent, I'd be very skeptical, very concerned. I want to go through it. I'd want you to have a lender like Shannon who can explain the details and make sure you're packaged up and ready to go when you submit the offer. Because if you're just starting to understand what's involved in it, when you put your offer together, that dog just don't hunt. It just doesn't work.
That's right. And even if you have a cash buyer, it seems like it's a strong offer because it's cash. And you don't have to deal with the red tape of the lender, right? But
Maybe.
like I said, sometimes that, having a lender is actually better because there's a checks and balances in place. When you have a cash buyer, they can also, once you've accepted the offer and they've walked the property, then they can say, oh, I think we're going to actually change the price because X, Y, and Z, right? The property needs work. It needs this. We thought it was going to be less capital to invest into it. Now we're looking at our numbers again, and so they try to lower the price. So those are things that happen too when you're working with cash buyers.
Oh, hey, that's hope for first-time home buyers, honestly.
Yeah.
Because I'm in my world, I'm always thinking, cash is probably always gonna, prioritize. But that's good. It's good to know that, hey, look, as long as you have your ducks in a row on the lending side, you still have a shot as a first-time home buyer, regardless. So
There's different cash buyers. There's the cash buyer who you can verify who he is, where they come from. They send you over their JP Morgan private wealth account with like $15 million in it. We're going to buy it for cash for $1 million. There's that guy. And then there's the letterhead lender who nobody's ever heard of before. And you can't figure out who the buyer is and or assigns and all that. And so, again, I think that you can only play the cards you have, but if you play your cards well, you win in poker. That's how it works. You can win on losing hands, but you got to play them well. And so I think that's the whole point of this program. Why we do this webinar every week is to say to you, okay, it is hard to buy a house the first time. It's tough financially to get the down payment. It's tough to qualify for the income. It's tough to have the credit. The process is difficult, but if you do that, you get your piece of American dream, and we're here to help. So just get with good players who are going to help you get there. I think you like the outcome.
I love it.
Okay, I'm
Really
going to have my
nice of you.
soapbox. I'm sorry about that.
No, this is a good soapbox.
I bleed red, white, and blue, and we're coming into the last month before the 250th anniversary of our country. I remember when I was 200, when I was in high school. It was actually my high school graduation was 1976, 1776 200-year anniversary. And I was at the Bicentennial Youth Debates, and there's all kinds of programs and parades and parties and kind of crazy. But part of that is we call it the American dream for a reason, that people can come to this country, work hard, save money, and buy. And I was listening to a guy on a podcast say the guaranteed three-step solution for wealth: 1, live below your means; 2, buy a house; 3, pay it off over time. You really can't beat that formula. It's not, almost anybody can perform that formula.
Yeah, I mean, the benefits of homeownership are, I posted a reel on TikTok, and I had a lot of comments about why would somebody want to buy a condominium? Why would somebody want to pay HOA? But, the truth of the matter is that if you're not approved to buy an $800,000 or $900,000 house or more in, let's say, LA County, then you're probably going to look at condos, right? It's a really good starter home for a lot of people because they can get used to having the monthly budget, monthly mortgage payment. The HOA provides a lot of checks and balances too. They keep the community clean. They have rules that everybody has to follow, so everything is in unison. The place looks great. You don't have to worry about. I've lived in a condo before too, and I didn't have to worry about doing maintenance and gardening and all that kind of stuff. Everything gets taken care of. Of course, you pay for it, but sometimes your utilities are included in the fee as well, like water, trash service. Those are utilities you would pay as a homeowner anyway. So if part of your HOA fee, maybe half of it is going towards the utilities, I think that's pretty fair. It's reasonable. And, I ended up selling my condo later on down the line and bought a single family. So a lot of people do that. They start with a condominium, they get out of the renting cycle, buy a condominium, stay there for maybe 5 years, and then eventually move into a single family home or maybe even a duplex. So those scenarios work for a lot of people, right? It just depends what your individual scenario is. But I always think people, at least buyers that I've been talking to throughout the years, they want that dream of homeownership. I know I wanted it. I didn't grow up in a home. I grew up in an apartment, and I always wanted my parents to buy a home. I always wanted to buy a home, even when I was a kid, right? And I was a child. I wasn't even working. I was in school. But, if somebody can get to that accomplishment, it's huge, especially, if you're a single parent, it's a really big accomplishment. So I'm really passionate about it. And that's why I like helping people, get showing them all their options that they have. And so when people talk about, oh, well, you shouldn't buy a condo because you're going to pay an HOA fee. Well, you're paying rent anyway, right? So you're throwing your money out the window. At least with a condo, it's yours, and you can sell it and gain equity in it in the future.
Yeah. Speaks to me. I have a daughter and son-in-law doing very well. They have 3 kids, 2 in private school, very expensive. Schools in LA are terrible for their needs. Don't meet their needs, I guess I would say. And they live in a very nice apartment. It's not cheap, but my grandkids come over our house and play in our yard all the time. And I remember one day my grandson said, "I want one of these." I said, "One of these what?" We're in the backyard. What? He was pointing like to the ground. When he said, "What?" I said, "Yard." He wanted a backyard.
Oh my goodness.
It was like, yeah. And look, his father's working very hard. I'm really proud of him. They're very young and doing great. So, but that's the dream. They're working hard to pursue that dream. So, and it's real. I think that they have a plan and they're working their plan. So, okay, enough about my family. Let's wrap up here. Patricia, what's going on this weekend? Someone wants to get a hold of you. What's the best way to get a hold of you?
My cell phone number, 323-365-9909.
Fantastic. Anything special this weekend?
Well, we're going to air this on Friday, so it's going to be too late. doing an open house tomorrow at my condo in a listing in Montecito Heights. But I
I'll
have a
just
new
call
listing.
you and find out where you're going to be.
Yeah, I have a new listing coming up in San Bernardino. It is a probate listing, so
Whoa.
that's to come.
Whoa. Well, if you need help on that one, let me know.
Absolutely.
We're working on that one together already.
Yes,
Probate. You know, if you watch Patricia's IG, she had a bunch of content on probate. We closed ours was a trust deal, and then we have a couple probates we've worked on lately. She helps me with my probate business, and I kept thinking, "Wow, look at all this content she had. I'm really impressed." And then she calls me and says, "I got a new listing, and it's a probate listing." I'm not surprised because you've learned this business. You've learned to be a resource to your clients. Congratulations.
Right.
And
Yeah,
Shannon, how can we reach you, or what's going on with you this weekend?
Yeah. This weekend, what am I doing this weekend? I'm just going to visit actually my grandmother this weekend. But if you want to reach me, 661-317-8484 or my Instagram fund with Shannon, reach me. You can get in contact and get you qualified within 24 hours and get you started on that dream home.
Awesome.
Makes a big difference having a great lender. I'm Bill Gross at Bill Gross Probate. We're here to help. Reach out if we can help in any way. As always, make today your best day ever. Thanks so much.
Thank you.
Thanks,
Bye.
guys.